Hello, everyone. Good morning to you from this part of the world. And depending on what time zone you are tuning in from, I want to wish you a good afternoon and good evening. So, hope we all had a great weekend out there. And welcome to a brand new week and another exciting edition of our Forex Morning Mastery. I'm in fact thrilled to have you all here as we gear up for another week of navigating the markets together. And if you are new to the session, welcome to the Forex Morning Mastery. You are in the right place. My own name is Sheriff Daramola, and we usually run this session 3 times in a week. That is Mondays, Wednesdays, and Fridays, where we all come together to have a deeper understanding into the current market structure from both technical and fundamental perspective. I will encourage you to hit that like button. This goes a long way in helping us grow, helping this amazing community to grow. I truly appreciate your support. Now let's go into what is going to be on our radar for this week. In fact, we are going to be keeping a close watch on 3 key instruments, which obviously we have been monitoring in the last 1 month, which includes the US oil spots. Currently, oil prices are doing a sort of rebound after recent low. And this is driven by Trump's renewed sanction on Iran crude, but concerns over his aggressive trade tariffs could definitely slow global demand. So we are going to be looking into the crude oil market to see if there's going to be another leg higher, or will selling pressure return, giving us opportunities to sell. Then we're also going to be taking a look at the USDJPY. Currently, the Japanese yen still remains under pressure amidst fears of Japan becoming a target for Donald Trump's trade policy. Though we still have a hawkish Bank of Japan expectations, which is helping hold the JPY steady at this point in time. Will the narrowing US-Japan rate differential, at least the US-Japanese yen rate differential, shift momentum? We are going to be looking at that one too as well. So if you're a fan of the USDJPY, you do want to be staying tuned in. Then finally, my favorite amongst them, which is the XAUUSD, popularly known as the gold spot, is another asset we are going to be looking at today. In fact, looking at the chart this morning, we can see gold is charging towards another new all-time high, which is currently fueled by safe haven demand from trade tensions and expectations that the Fed are likely going to be cutting interest rates anytime soon. So will this bulls push gold to 2,900 this week? Of course, or beyond it, we never can tell. Stay tuned in as we go into the chart and see how we will be preparing ourselves for this week. There is a lot to unpack today, and we are going to be breaking it all down together, analyzing the price action, sentiment in the market, and of course key technical levels to get us set for the trading week ahead. So stay tuned in, everyone, engage in the chat, and let's dive right into the business. So as always, the first thing we normally do is to hold on a second, please. I think we have in hold on a second, please. Let's see. break. I just had to sort out some technical issues here, but I think we are good to go. So, where did we stop? Okay, I was saying here that we want to look into the economic calendar. Of course, let's see what majority of market participants will be looking at to make informed trading decisions this week. And based on the assets we are monitoring for this week, we are going to be focusing on impactful event from both the United States and the Japanese economic docket. For this week, we already have one that happened about 12 hours ago. Is it 12? 12? I think 9 to 10 hours ago. That is the current account NSA from the Japanese economic docket. This is a current account that this is the Japanese current account, and it indicates the trade balance they have in their account. If there is a deficit, it indicates that there is a net capital outflow from the sources, and if there is a surplus, that means that there is an inflow into the Japanese account, which is obviously going to be a positive one. And if we look at the expectations, it was pegged at 1.36 billion Japanese yen as against the previous month, which came in at 3.352 billion. So the data came in below what expectations were, but it's still positive. At least we had a 1.077 billion Japanese yen, which is still on the positive side, which is a positive one. Of course, we are going to be looking at how the market had reacted to this, especially on the USDJPY market. So stay tuned in if you are a USDJPY fan. Now, for today, Monday, February 10th, we do not have any event to look out for. In fact, even after including the mid-tier economic event, we really do not have anything to look out for today. So that simply means that we will be relying on our technical skills to identify strategic areas where we will be either buying or selling within the current market dynamic. So, and before we go into the chart, it's important for us to also talk about what a market will be looking at tomorrow, Tuesday, February 11, in preparation of our Wednesday session. So tomorrow there are a bunch of speeches from the United States economic docket. 1:50 p.m. UTC, we are looking at Hammack speech. We are looking at Bowman's speech by 8:30 p.m. and we are looking at Williams' speech by 8:30 p.m. too. Then the Fed chairman is going to be testifying in front of the House of Congress, and this is going to be going on for about 2 or 3 days. Let me see. I think we have it on Tuesday, we have it on Wednesday. Okay, it's Tuesday and Wednesday, and definitely everyone wants to hear what the Fed chairman is going to be saying, as it will be giving the market an insight into the potential monetary decision from the Federal Reserve, and in fact future interest rate decision based on the assessment of the Fed chairman of the US economy. So this is one event we want to be monitoring. So this is what we are going to be looking at for this for the next 48 hours, 60 hours or so. And on Wednesday is one other major event, the consumer price index. We will be talking about that on Wednesday, but we obviously know that the anticipation of major events like the consumer price index has a significant influence on the markets. So with that being said here, let's dive right into the chart, and let's look at what we want to be preparing ourselves for. So the first asset we are going to be looking at this morning is going to be the US All Spot. And what an interesting situation we have on the US All Spot. Like I did say earlier, the market has started the week on a positive note. We saw a rebound in the US All Spot, which could be attributed to the sanction narrative that Trump is having for the for the country Iran. Now, to understand this market, we need to look at a bunch of things throughout the course of the week. For instance, we want to be monitoring the US-Iran relationship. If sanctions tighten further, we want to be expecting supply concerns, which could drive oil prices higher. However, any diplomatic resolution could ease prices and, of course, boost the price of crude oil. Exert pressure on the prices of crude oil. Then we're also going to be watching for trade war development. If there is going to be any further escalation in the US-China trade tension, which could limit crude demand, while positive trade talks could support recovery of oil prices. So this is another thing we're also going to be taking into account while we look at the market. And then we're also going to be assessing the strength of the US dollar. Remember, the US crude oil is a US dollar denominated asset, and whatever happens to the US dollar will definitely influence the price of crude oil. Now, what do I mean by that? Well, if the value of the US dollar continues to rise or remain strong, the US crude oil will become much more expensive for other currencies to buy, because they will need to convert their local currency to the US dollar before they can actually purchase the crude oil, making it expensive. And if it's expensive, the demand for crude oil will reduce, supply increases, and what happens? Price will tumble. But if the value of the US dollar gets weaker, this could provide bullish momentum for the US crude oil, as the prices of crude oil will be cheap, and this is likely going to be increasing the demand for crude oil. So we are going to also be taking note of that one too. And of course, we are also going to be looking out for confirmations before taking long positions. Given the uncertainty in this market, we want to wait for strong follow through buying opportunities before committing to bullish position. I still strongly believe that the path of least resistance to the crude oil still remains to the upside, due to two major factors here. That is the sanctions on Iranian oil exports, and of course Trump's reaffirmment that is committed to reducing Iranian oil export to zero, which raises concerns over supply disruption and supporting oil prices at the same time. So I would want to look out for buying opportunities around the crude oil today and maybe for the next 24-48 hours. However, we will not ignore the potentials that the US dollar could also rise due to the concerns over Trump's tariff. And if Trump's new threat of 25% tariff on all steel and aluminium imports into the United States is valid or comes to stay, it could slow global economic growth and weaken energy demand. And this could also cause inflation in the United States. And when there is inflation, there is a high chance that the dollar will increase due to potential monetary tightening policies. So, in as much as the path of least resistance is looking very bullish, we are also going to be taking into account the potential that sellers could come in based on these factors we've talked about. Now, going into the chart right now, I still think I have a position running. Yes, I do have a position running on the US All Spot. If you look at the trading panel at the bottom of your screen, I have about 30 pips in profit at this particular point in time, though I've moved my stop losses to secure some profit out of this position. So today we are going to be looking at the possibility of this uptrend to continue. And to do that, we let's scale up into the higher time frame. So we want to start from the 4 hours time frame, where I was able to identify a simple trading setup after taking into account the character of price action since the beginning of the year. And of course, we saw price eating, I think, around the $79.25 level during the first or second week of this year, as you will see. And as soon as price tested that level, something interesting happened. We begin to notice price drop significantly, evolving into series of lower lows and lower highs right into last week's trading session. And taking this into account, we have a beautiful descending trend line in place after connecting the structure together. And look at what we have right now, taking into account the character of price action since the beginning of this month. And one thing I have noticed here is how, since price action got into the $70.50 level, that area between the $70.50 and the $70 area, we have noticed how it had become difficult for sellers to break through that structure. This continued into the second half of last week, as we saw here. Buyers came in again, and since the new week began, buyers had continued to push prices to the